Welcome to Multifamily on Zoom. We are so thrilled today to have you guys with us, and more importantly, to have our special guest here. We have Clint All from iProtect Insurance, Commercial and Financial Services, and Clint gonna discuss for us about insurance. As you guys know, last year insurance was a big old besides it was a big downer. Besides the rate, insurance was another big elephant in the room. But this year we want to know a little bit more. We just got to third quarter and trying to understand the market a little bit. And insurance would be one of the things this year we have not brought here. But another thing I'm really happy about to have Clint here. That is Clint's first time here since we've been doing this since 2022. For some reason, Clint and we have a history that for some reason I was reaching to Clint forever and then could never find him. And I said, you know what, this guy just don't like me. I've been reaching out to him. He never answered my phone. And everybody know the story. I told Ginny about it. And then last year in Nashville, I saw Clint at Ultimate Partnering. And I said, Clint, you and we have something to take care of. And then to find out my number was wrong. The phone number was wrong. And then that's probably one of the reasons we never have Clint here. I will email, he would answer, but I will call, nothing. I'm like, what's going on? So that was very funny, but we are so happy to have Clint here today. Um, I don't know if I really need to introduce Clint. Clint is really big when it comes to our mentor. We all know him. We go to whitmap.org all the time. And with that being said, let me look. All right. So yes, so you guys know a lot about Clint already, some of you. But since this is Clint's first time in our platform, Multifamily and Zoom, so let me say a little bit about Clint. Clint is a vice president, I Protect Insurance and Financial Services. He's the founder of ratemap.org that we so love, especially if you're from our mentor. He's a multi-family investor and risk management strategist. Clint is a seasoned insurance executive and multifamily investor with over 15 years of experience helping property owners navigate the complexities of risk management and insurance strategy. As vice president of iProtect Insurance and Financial Services, Clint leads a team that provides tailored coverage solution across 37 plus states, specializing in the multifamily housing sector. In addition to his leadership at iProtect, Clint is the founder of Whitmap.org, a first of a kind platform offering real-time insurance pricing, risk tools, and practical training for apartment investors. His dual perspective as both an investor and a consultant allows him to deliver insight that protects investment and maximizes long-term value. Known for his client-first approach and deep industry knowledge, Clint has become a trusted advisor to syndicators, lenders, and property owners nationwide. Whether structuring insurance program, mitigating risk, or advising on portfolio strategy, he brings clarity and result to every conversation. Clint, you are very welcome to our platform.
Thank you, Suze. Thank you for having me. And I'm glad we got the number thing figured out. This might not have never happened, huh?
That took care of everything. We no longer have a bond to pay. Well, I no longer have a bond to pay.
Well, I'm glad you got me on here today because now, we, as far as doing webinars and calls like this, they're a lot more fun now because now we can start to give good news. Like you mentioned, the 2 or 3 years prior to this, insurance was tough. It was tough for multifamily investors. We were seeing renewals 40, 50, 60% more year over year for no reason. There was no claims. It was just, the carriers had less capacity and less profitability, so they were running that downhill, and everybody's prices went up, which caused a lot of deals not to pencil, caused a lot of people to cut back on distributions to their money people, and it was just not a fun market to play in. And having to deliver that bad news all the time was not fun. But that was in the past. I would say the last, probably beginning of this year, it's dramatically changed. Reinsurance. So last year, I'm assuming because there was not a ton of huge storm outbreaks, a lot of carriers, because they raised those rates, they were able to get their profitability back in line where they wanted to see it, which allowed them to reinsurance companies to offer more capacity, which allowed the carriers themselves to be a little bit more aggressive. Pricing has gone down. Carrier, what's the word I want to use here? Carrier participation is picked up. Carriers that were pulling out 3, 4 years ago, now they're coming back and they want market shares, so their pricing is real aggressive. And anytime you have that level of competition, it's good for the consumer because people are going to, lower their costs to earn that business because they want that market share. So as of this year, I mean, we're seeing anywhere from 10 to 15% decreases on renewals, an overall drop of about 10% for any new business. We're having, whereas, 2 or 3 years ago, we'd have one quote, maybe two. We're seeing 3 or 4 options, and it allows us as the agent to take that risk and then use that leverage with other carriers. Hey, we've got a price of 10,000 here. Can you beat it? And they want to come in at 9,500, and then we take, and play the game back and forth to help you guys as far as investors get that price back down to where, a deal can pencil and you guys can make some money. So it has been a very a lot more fun. I've told everybody, I was like, my job is fun again. I enjoy my job again. So these rates have definitely helped with that. So that's definitely the good news as far as what we're seeing in the market as of now. So some of the things that you guys can do, if you guys are looking at properties, and one of the reasons they're able to be able to do this is profitability. So in order for you guys as consumers want the carriers to be profitable, because the more profitable they are, the lower their rates are, the more aggressive they are, the more market share they want. And the way they become profitable is not file claims. Obviously weather claims are tough to stop, but 40% of claims on apartments are kitchen fires. And there's ways to mitigate that. So, if you want to keep your costs down, you obviously want to make the property safe. I mean, it's so, fire stops over the hood of a kitchen, they're basically release a chemical and put out a fire the minute it feels that heat. Fire extinguishers in every unit, no grills on the porches. I mean, carriers are looking at this stuff now. I mean, we have carriers, very reputable carriers that you have heard of, that'll literally go on Google Earth, and if there is grills on a balcony, they'll decline to quote it. So, when you're walking properties, those are things that you almost have to think like an underwriter. Like, what is going to be a problem here? Cracks in the sidewalk, handrails for stairs being dilapidated and torn down, no non-slip, if they don't have any non-slip material on the stairs, especially in a colder region, where there's ice and things like that. When you're walking a property, I highly suggest looking for those things. Some other things that you can look for. inside the units, if they've got a lot of clutter, an inspector's not going to want to see that. Obviously, roof conditions, they're using drones now to check roof conditions during inspections. They're not even getting up on the roofs. And some of these drones, their quality is amazing. You could see the actual granules in the shingles. Um, having pet policies in place. We see a lot of pet issues where pet bites and dog bites and things like that can cause lawsuits. Um, Requiring your tenants to carry renters insurance. That's another big one I would highly suggest. So, if we want to keep these rates, at a palpable level, these are some of the things that these carriers are going to want to see in order to be aggressive with their pricing. So, um, we could go through any particular, if you guys have anything that you guys want to talk about specifically, because I know with insurance, every deal is different. You might have a property right next door to each other, and let's just say my market, Huntsville, Alabama. But if one's built in the 70s and one's built in 2010, your pricing and your risk management plan are going to be completely different. Um, you know, as Sue's mentioned, we have the rate map that we use that we create to help with your underwriting. Those are typically updated quarterly based off of actual numbers that we see in the marketplace. So feel free to use that. That's a free service we have. We do have a paid version. Typically, my pitch there is if you don't have something under contract, there's not a ton of value, or you're okay with the free version until you get something under contract. Once you get something under contract, there's tangible loss prevention checklists and everything that I'm talking about built into a PDF form that you could walk the property with that PDF form and check all the boxes as far as what most inspections are going to be, or inspectors are going to be looking at when they come out to inspect your property from an insurance standpoint. So, yeah, I mean, we don't really have to get too deep in the market right now because I mean, at the way it's sitting right now, most of our numbers are down 5 to 10%. We want to keep that going. Market carriers have got capacity. We're seeing new carriers come into the game, so things are looking real good on our end. We're starting to see a lot more deals come across our desk, so that's a good thing. I think activity in the marketplace is picking up. So if you guys are anybody's waiting on the sidelines, it seems to be they're picking back up. So I would start acquiring, now with any broker relationships you have, because we're seeing a lot of activity now, a lot of activity.
That is great to hear. Um, so we're seeing a lot of activity starting this quarter. So what besides you think there's some stuff in the market that are moving that can you pinpoint exactly what in your opinion that is that what is driving the market right now? I know you say insurance is about 10 to 15% down, but however, I see a lot of people still trying to get refinancing, a lot of people still trying to, have distribution on hold. And so what you think is driving the market right now and what you think when you think the market gonna be moving, do we still have quarter 4 or do we need to wait till next year to see big movement into the market?
Well, my opinion on that is a lot of activity we're seeing are people that have to sell, because their loans are kind of getting to a point where they're going to have to refinance and the terms aren't the same that they were when they got the loan, so a lot of people are kind of in a position where they have to sell. To your point, interest rates haven't come down, so there's still some hesitation. But the people that are buying, the deals are getting done because a lot of the costs, well, not a lot, but a lot of what we're seeing from a cost standpoint are going down. So somebody can get into it a little bit better than somebody that's coming out of a loan that they were paying 3% interest rate, 3.5% interest rate. Now they're getting 6.5, because some of the costs are coming down, it makes sense for them to make the numbers work. Don't know. I'm more in the risk management side of things. I'm just, basically telling you what I'm seeing is I'm seeing a lot more activity. I think a lot of it is because some of those 5-year notes that are coming up, that terms aren't where they want them to be in the market right now from a loan. So they're getting off the property. They're taking their money and running. So, they're selling, they're a little bit more apt to sell, and the new buyer can experience lower operating costs, one through insurance, hopefully through other aspects as well.
Right, right. Um, as far as like when somebody, I think we can take this a little bit backwards, stepping back a little bit, especially for some students that are in the goal right now. Can you walk through, let's say this is your first property and you're trying to get insurance. What are the steps and what are the things that you need in order for you before somebody call you and say, hey, Clint, we have this thing under contract. And whether it's under contract or they're about to get in contract, and then what they actually need to do to make sure they're going to get that insurance at a price that's going to make it really make everything pencil out in a way. Of course, I know we cannot come and say, oh, okay, we're going to make everything work out. But insurance play a pivotal role when it comes to getting a property. As we could see last year, a lot of things were getting a little some type of way. But can you walk a student to what needs to be done as far as this is my first deal and then I need insurance that will
Yeah,
make everything work out?
sure, absolutely. So, as an investor myself, I grew up, give you a little background. I grew up to investors. My parents were real estate investors. My degree is in real estate law. I joke with people that this is the only thing I know. And what I've known, the most thing that I know about the type that invest are they're very busy people, not just, it doesn't matter what they're doing, but they're always moving. They're always, whether they have a job or they have 2 or 3 side hustles, they're always, it's an entrepreneurial mindset, so they can't sit still. So we try to make it very, very easy. So that's why we created rate map. So prior to getting something under contract, you got to make sure it pencils, right? That's why we created rate map. Most of the time, you start there. If you could get it to pencil using rate map is very conservative by nature. I do that for a reason because you're underwriting. So you get something under contract using rate map, you get a signed LOI. You don't even have it under contract. Let's just say you got a signed LOI. At that point, you can come to me, call me. RateMap Pro has got my ratemap.org should have my cell phone on it. If not, I know Sue's got it. So if you guys want to she's got my cell phone, the correct cell phone this time. Um, and you guys call and say, hey, I've got a deal and so, and the current owner's paying this, and where do you think it's going to come in at? I'll take that address. I'll give you a little bit more of a dialed in indication based on, because unit size and year built and location and all of those things kind of tweak pricing. So I can kind of give you a little bit more dialed in indication at that point. And then in order to get a formal quote, I'll need some documents that you're going to get during due diligence. It's loss runs. That's the biggest thing. In order to keep your pricing down, because you're going to be a new owner to an insurance carrier, they're going to have a little bit, I don't want to say hesitation, but there's going to be a little bit more of questions, I guess they're going to have. So I'm a big believer in, if you've got something under contract, you've gotten me the loss runs, we put it together and sent it out to 60 carriers. That's typically our process. That's what we do. we need to sit down, you and I, and figure out a game plan for risk management. Because what they're going to say, they're going to Google that property. The insurance carrier is going to Google that property. They're going to see Yelp reviews. They're going to see Google reviews. They're going to see pictures. They're going to see anything that anybody posts. And what do most people post? Negative stuff. They don't go on there a lot of times and put how wonderful everything is, because that, most of the time, you're a lot of, if a carrier sees negative reviews or negative news articles about a shooting or a fire, that's all going to be brought to light. So we got to have a plan and be proactive of, hey, yes, this owner had an apartment fire. It was caused by a kitchen fire. What we're going to do is we're going to put fire extinguishers in every unit. We're going to inquire about stovetops so this doesn't happen moving forward. In addition to that, we require all of our tenants to carry renter's insurance. So essentially what we're doing is we're being proactive. A lot of this, because we try to make it easy, when we get to that point, it's going to be me talking with you and communicating with you. Hey, look, what would you be open to this? How do you think about this? We come up with an actual plan for your property, specific to your property, you know, to satisfy these carriers. Because at the end of the day, we want the carrier to walk away feeling almost like it would be stupid for them not to insure this property, because that's how you're going to get your best rate. And how you do that is be proactive on the risk management side. So, and that's what I'm here for. Like I said, I try to make this very, very easy. I want this to be mindless for you guys, because at the end of the day, you have lending to worry about, you have property management to worry about, you have capital raise to worry about, you have structuring the deal. All of that is on your plate. Let me just take care of the insurance. We'll talk about it, and at the end of the day, I'll put together 3 or 4 different options, hopefully, and we can go through the pros and cons of all of those options once we get those formal quotes, figure out which one best suits you and your investors, and we make a decision that you could sleep good at night buying. I'm a big believer. My mom is now an insurance agent. She's been doing this 30 years. I've been doing it 15. And she taught me when I got into this is insurance. You're buying peace of mind. It's not a tangible product. When you buy an insurance policy, you don't want to lay up at night thinking, I'm paying too much for this. Or adversely to that, you don't want to go to bed at night thinking, man, I hope I got coverage for this storm coming in. You should lay to bed at night saying, okay, I've got good insurance. I got nothing to worry about. I'm going to sleep like a baby tonight. My price isn't that bad. My coverage is great. That's when you have a good policy.
That is great. I like the way you break it down. So, excuse me. Um, Now, I, if I, if, do you guys do all type of asset class when it come to insurance? Let's say I have an RV park, or I'm doing storage, and what's the other one? Medical offices. So besides multifamily, do you guys do other asset class? Are you guys more prone to some asset class than others? Are you more specialized in some other ones?
Yeah, we do them all. Because I'm an investor and the world I understand, if it's a piece of property that makes you money, we write it. I've got portfolios of single family homes. I've got storage facilities. I've got RV parks. I've got medical office building. I've got strip malls. If it's an investment property, you know, we can put together a risk management plan and insurance options for you.
Okay. All right, guys, do you guys have any question for Clint? Any questions at all? Okay, go ahead, Bob.
Hello, Clint.
Hey,
Uh,
Bob.
how are you?
Good. How are you?
I'm doing fine. Also relating back to UP in Nashville, I recall looking over your shoulders at Upper Broad up there, and we were talking, but we were talking about some of the regional variations in insurance costs. And in Florida in particular, there were carriers actually leaving the state, and to that extreme. As that situation improved as with the other improvements you're talking about here?
Yeah, we've actually I've probably had so I'm originally from Florida, so I've got a lot of connections down there, and we got a lot of market down there that I get to play in, and it's been great. ICAT, AmRisk, these big carriers that were down there that were very competitive, they're back. We are seeing some stuff in fact, I've got 3 or 4 deals I'm working in Florida right now as we speak. And I would say, where we were probably in Nashville at that conference, we were probably 3,300 a door. I mean, if I get, I expect under 25 a door right now. So it's dropped dramatically from a price just for the simple fact of we've got 3 or 4 more carriers now playing. So they're aggressive with their market share. They're able to, give us competitive terms because they want to steal it from Citizens, or Frontline or any of these companies that were coming in and kind of dabbling in that space. So yeah, Florida's been great. Still higher than most of the country, but that's to be expected because it's probably one of the riskiest states in the country.
Risk cost.
Yeah, sure. That's right. That's right.
Oh,
Thank you.
obvious reasons, right? Okay, Judy, go ahead. Judy has a question.
Hey, Clint, nice to see you.
Thank you. Thank you, Judy.
So I have a question. There's 3 types of insurance that we should be looking at, correct? It's general liability, property, and loss of business.
Yeah, so loss of business is basically your rental income. And that falls under your property coverage. So when you get a property quote, that property is going to have it should have replacement costs for the building. So if the building gets blown away, it'll have that replacement cost. It'll have what they call business income or loss of rents. And typically that number is pretty discretionary based off of what the property's bringing in for rents. So, that's a number that you and I would discuss if we were working on a deal together. And then the general liability is slip and fall insurance is the best way now to put it. Somebody sues you because they fall in the parking lot, your general liability typically is your attorney on retainer.
So when we're getting these quotes, let's say we don't go through you, we talk to other brokers, because you'll be one of our contacts, obviously. But do we make sure that they give us all 3 of those, or will they automatically just give us all 3 of those?
I mean, every agent's different. I mean, if they know what they're doing, they're giving them to you. Yes.
Okay.
And a lot of it is if you guys use Fannie or Freddie loans, your lender's going to require substantial insurance. It's not even really up to us agents. If you're using a Fannie or Freddie, they require those 3 that you mentioned. In addition to that, an umbrella. In addition to that, ordinance and law coverage. They don't want co-insurance. They want equipment breakdown, and they check all of this. So if you get a Fannie or Freddie, you're going to be well protected. You're going to be paying for insurance, but you're going to be well protected. And it kind of takes it out of us agents' hands. Now, you go to a conventional lender, just a typical bank, they're just going to want to see the 3 that you're talking about most of the time. Maybe an umbrella, depending on if they have like somebody reviewing the policies. But other than that, if they've ever written a property before like this, yes, those 3 are bare minimum what should be on a policy.
So what do you mean by umbrella? I've heard that term before.
An umbrella is over the top of your liability. So typically speaking, general liability, it has $1 million worth of coverage per occurrence, $2 million for the year. So you can have 2 accidents that are $1 million each, or 50 accidents that total 2 million. Well, as you know, if you have a pool and somebody drowns in that pool, that 1 million might not cover the loss that you're going to experience. An umbrella goes over the top of that 1 million. Typically, a lender will require a $2 million umbrella, which would mean you'd have the 1 million per occurrence plus the 2 million over the top of it in the event of a tragic accident. So it basically, it saves you from a nuclear verdict of a death, basically. If a fire, we've seen where a property manager forgot to change out batteries and smoke detector didn't go off. Uh, Fire started, person was sleeping inside, ended up dying. They sued our property owner and won. And thank goodness they had an umbrella, because the judgment was like $4 million. So
Okay.
umbrella basically is over the top of your liability to basically keep you from having a huge legal payout for something that you were found negligent in.
Okay. Thank you.
Uh-huh.
All right. Anybody else will have some question for Clint today? If not, I'm gonna keep on going. So now let's get into we have me and my partner, we have just gotten into um RV park. And this is one investment we started doing. In fact, we're having a syndication right now where we're raising money for an RV park. So if I'm looking for an RV park, as far as insurance, what do I need to know and what am I supposed to do?
A lot with RV parks are going to be amenities. So, some of them have lakes or on the water. That's going to be something a carrier is going to look at. If there's dog areas or fire pits, or pools, we're going to look for those types of things. How long are they allowed to stay? How many pads there are, how many hookups there are. That, obviously the more hookups, the more money it's going to be. But because there's such little, you know, there's not as much risk as, there's obviously they're less intrusive with their underwriting. They probably are going to want to see the contract or paperwork you have somebody sign if they come on site, and see what levels of exposure you have based off of, do you guys have hold harmless agreements, those types of things that, people put in contracts to kind of cover their own behinds. Those are the kind of the biggest things that we see at RV parks. But the biggest one is amenities. They want to, because every RV park is different. We've got one here in town. It's right on the river. Well, that's going to bring a whole new set of risks that a carrier is going to want to see. If you set up an RV park and it's a bunch of kids over there by the river and they start drinking and, fall in and drowned, their family can sue you. Doesn't mean they're going to win, but they can sue you. And if contracts or whatnot are not in place that look good, your carrier could end up paying out because they don't want to fight a year-long battle paying attorneys $1,000 an hour. So they'll settle with them. Well, guess what? If they settle with them, you don't really have a choice in that. And once they settle, you have a loss on your record. And the next time you go to get insurance, your price is going to go up. So the thing that I would look at is amenities, and then it's okay to have amenities. You just got to make sure that you have things in place to protect you from any exposures you have with those amenities.
So like when you okay, so I have to protect myself. So basically all my amenities need to be covered. Is that what you're saying?
Or there needs to be some type of, yeah. So like let's use a lake. You got a
Okay.
lake. Well, okay.
Yeah.
Is there signs saying no swimming, no trespassing? Is there a fence or something up to keep kids from walking down to the riverbank? Those types of things. Is there no trespassing signs? If you had a pool, same with a pool. Is there a gate around the pool? Is there a self-latching gate? Is there signs posted? Do you have life safety, i.e., like a little buoy thing that you throw out into the lake or the pond or pool that somebody's drowning? Those types of things need to be present when you have those amenities, because what's going to happen is that inspector's going to go out there, and if it's not out there, they're going to make you put it out there. And what you don't want to happen in that situation is if it, let's say it's a fence. Well, fence is expensive. And if you've gone to your investors and told them this is how much money you need, and then you have to come back and ask for more money, you're not going to look very professional to those investors, and you don't want that. So essentially what you want to do there is everything, all of that be addressed on the front end so you can include it as part of your CapEx money.
Okay, so once I have all this covered, like for example, let's say something like would insurance, if I have the sewer and my sewer is a little bit old, and sometimes some of the sewer, depending, because a lot of those um RV parks tend to be in rural area. And back in the day, things were done differently. If they kind of old and they may not report those sewers. And now there's like new law in town, new regulation where those sewers need to be reported and they need to have permission. They didn't have permit for those things and they need to have permit now. So would the insurance get into these things? Will let me know to get those things taken care of, because if a sewer is not permitted, at the end of the day, there may be some type of violation. So are you guys involved in all those? I know you mentioned amenities, but I wanted to know how those specific things that you need in an RV park can also be affected or impacted by your insurance.
Yeah, so they're not going to get real involved with the permit type thing. Insurance is not. Now, where that would come into play from an insurance standpoint is if something happened and you had a covered loss. I'm trying to think of one where it would involve a sewer, but let's just say you have a covered lot. Tornado comes and destroys the sewer, and you have to replace that sewer, and that'd be a covered loss. That would be part of the coverage. They would essentially, what they would do is you'd have to have ordinance and law coverage. Ordinance and law coverage is basically coverage that gets your property up to the most recent code. Because what they'll do, building coverage is basically replacing. Well, because code is new, let's say you have to have a bigger septic tank or a bigger sewer.
Right.
That ordinance and law would cover that difference, if that makes sense. Because the new code, you have to have that up to your newest code. That ordinance and law coverage would cover that. As far as if you bought a property and the sewer's not up to the most recent code and the city makes you replace it, that insurance is not going to really get involved with that because it's not a covered loss. Insurance is only going to get involved if it's a covered loss.
And by putting those signs you were describing earlier, so will that help lower your cost, or will that help with, I know it's there for prevention, will that help, I guess, in the mind, so intentionally you are thinking of mitigating the risk, like, manage the risk in the way that, hey, you let people know, hey, keep that in mind. You guys need to do this. You guys need to do that. And we are on the river. This is what could happen. So is that what those signs, the insurance will pay attention to those signs and more like at a prevention state of mind? Is that what it is?
Yeah, well, I mean, it's what you're doing is you're making, you're not going to have a direct premium decrease. They're not going to say 5% taken off. So what will happen is they're seeing that you're a proactive owner and that you have pride of ownership. And what it's going to do is it'll open the door for more carriers to quote it. So like if you have a carrier on a fence saying, oh, we don't ride a ton of RV parks, but you know what? This one has pretty good ownership. They've got all this stuff, blah, blah, blah. We're checking all the boxes here. We'll offer a quote. Well, that's great because now the companies that do write RV parks, I could take this quote from the one that was kind of on the fence, use that as leverage, and you have more options because you're being proactive. So indirectly, yes, it lowers your cost because it makes you look more desirable to a carrier. And that's when your price starts getting good, is when you're desirable to a carrier.
That sounds great. That sounds great. Do you guys have any question for Clint?
So I'll follow up on an RV question. When you talk about, amenities and all that. So one of the things Dave talks about is, additional rental income. And I've seen some RV parks that rent out golf carts. What's your thoughts on, what kind of, you got to
Yeah.
get them to sign something.
Yeah, yeah, I mean, like I said, I'm not anti-amenity. I'm just saying if you're going to have amenities, let's have proper things in place to protect you. Yes, like you said, we're not responsible. Get a copy of their driver's license. All of that stuff might be irrelevant and you'll never need it. But in the case of that person running into somebody else and hitting somebody else, because what's going to happen is not only you're going to have damage to the golf cart or potential property, now you've got people injured. And that's where things get real sticky, because you're going to get an ambulance chaser attorney that's going to want $100,000 for a broke arm, and you didn't do anything. This drunk person went accidentally hit somebody so I'd have rules set up, no driving and drinking it, we're not responsible, hold harmless agreements, those stuff that there's templates and whatnot out there for that, and or attorneys can help you with. But yes, if you're doing the golf cart thing, great amenity, might help bring in tenant, but make sure you're protected in doing so. That would be my only advice.
It's funny you said that about an ambulance chaser, because I have a friend that owns a security company, and she had her son actually, as an employee, was driving a golf cart. Little kid ran up, barely bumped him, but they were Hispanic, couldn't speak English, wound up getting an attorney, 3 years, and like $1.3 million later is what they wound up paying out. And that child was not physically harmed. So
I could
yeah.
tell you some of the worst stories that you've ever heard. I mean, about death situations, and it's some of the craziest things. You got, when you get into a court of law over this stuff, these ambulance chasers attorneys paint investors as these multimillionaires that are just out here with a portfolio, a mogul, and they come after these insurance carriers. Well, you got to remember too, these insurance companies are using their attorneys at anywhere from 500 to 1,000 an hour. They don't want to fight this. They want to pay out and move on. So if they can get out of paying $50,000 and be done with it tomorrow, well, guess what? They're going to do that. They're going to pay the $50,000. They're going to slap a $50,000 loss on your record. And when you go do insurance, when you go to get insurance next year, you have a $50,000 lawsuit loss on your record. Guess what? Now your insurance is 20% more for the next 5 years, because that's how long it counts. You're going to end up paying that $50,000. So it always make sure that you have proper documentation, and that gets into a little bit more of an attorney, drawing that type of stuff up. But I would highly recommend it. Every amenity, look at it. What's the worst that can happen? And try to figure out a way to mitigate that, because that's how an insurance company's looking at it.
Thanks.
You're very welcome.
All right. Any more questions, guys? You guys don't have any questions for Clint?
What's your thoughts on the Dallas-Fort Worth market?
We're seeing a lot of action there. We're getting a lot of activity in that Dallas Fort Worth market. I mean, I would say that's probably one of our more active markets right now. That in Atlanta, we're seeing a lot of activity in. So, I mean, we've got market share there. I don't know enough to speak intelligently about the metrics as far as, population growth, job growth, the key markers. But I'm a big believer in, you guys are the smart investors. When you guys usually tell me, and it's usually through, I've got this deal in Dallas, I got this deal in Dallas, or I got, or I'll get 5 or 6 calls next week of Phoenix for, and it's like, okay, Phoenix is turning up, it's kind of one of those situations. That's how I typically figure out what markets are doing well right now, is by the influx of calls in that particular region.
Okay. Do you see a lot of like, there's a lot of hail and stuff in there for weather, right?
There's problems everywhere you go. I mean, we're in a convective storm here in Alabama. Alabama's got it rough. Tennessee's got it rough. Michigan, we're seeing some, they've got their storms. I think anywhere you go, you're going to have, issues. I think it's just a matter of which issues are you going to, are you could stomach.
Yep. Yep. We were there last year, and there's the hail repair business for the roof, the hail repair business for the RV, the hail repair business for the vehicle. And like, well, that's the business to be in, is hail
Yeah.
repair.
Yeah. I mean,
Man.
Texas. See, when it hails in Texas, it's big. It's just like, everything's bigger. I mean, where here you get quarter and dime size, in Texas you get softball size, and it's like, that's just how that goes. It might happen less frequently, but if you're going to be a bear, be a grizzly. That's how Texas operates, I guess.
That
Yep,
is
we
so
have
true.
friends. Yep.
That is so true. Fort Worth, Texas used to be my home. I live in Texas for 15 years. I live in Fort Worth for 5 years. Yes, we do have hail, but that's not something that happen often. I think when it comes to hail, it's more vehicle targeted than housing. Yes, housing can get some of it, but I guess because it's not as often. But as Clint was saying, they big. The size of they kind of big. So yeah, but the Dallas Fort Worth market has always been a very moving market. I've never seen that market down though for a while. Whether there's a lot of ups and downs, that's a market that keep active. And if you look at it, look at the metrics, most of the conferences are in Dallas Fort Worth. And I think that's another way to know where things are happening. A lot of the conferences, most of the big conferences happen Dallas Fort Worth. I would say every 2 months has a big conference in real estate happening there. It's just if it's someplace you live, you probably don't have to go too far to go to conferences and meet people. The networking when it comes to Dallas Fort Worth, it's up to the roof. Because there's a lot of conferences there going on there. Personally, I know 5 conference back to back, big conference happening all the way to September, back to back for August all the way to September. So that's how big that area is, and there's a lot going on there. So if you can get yourself into that market, go for it. The thing is, Dallas Fort Worth, it's one of those markets that kept extending itself because the suburb keep on pushing themselves out there. So when you get to the Plano area and a lot of big business, Texas really good at bringing how you call it, new investors. So there's a lot of company like to do business in Texas. That's another good thing for Texas. So yep. Let's close that chapter. So we 6 minutes top of the hour. I know we're only supposed to be here for an hour. So do you guys have any other question for Clint? Because I have one more question left. Do you guys have any other question you guys have for Clint? I mean, y'all, I bring you the insurance giant here. If you guys don't ask a question, don't blame me. So as we're about to close, and now we are in third quarter. So what advice, as far as insurance is concerned, do you have for an investor right now in real estate? I mean, the market is really tough right now. There's a lot of things going on. Um, how would you advise somebody right now in real estate?
Well, from a insurance standpoint, I mean, I would say that if you could think like an underwriter, I know that's hard because most of you don't know underwriters, but basically just find worst case scenario in every situation. You'll learn how to mitigate that. I mean, and that's how, I've been doing this for 15 years, so it's a little bit different, but from a standpoint, when you're walking a property and you see a crack in the sidewalk, make a note of that and figure out a plan to fix that. If you see siding starting to come off, if you see grills on board, make notes of all of that and then come up with a plan to fix that. Because if you're proactive in that aspect and you bring it to an agent like myself who can tell a story to a carrier of how great you are as an owner, yeah, this property's in, but this owner is going to make this property. You're stealing money from them insuring this because they're not going to file a claim. If I can tell that story, well, then I can get more people that want to be interested in insuring it. And if I have more people that I can interested in insuring it, I can get you the best possible price. So I think the best thing to do is think about all the doom and gloom when you're walking a property. Don't get excited. Don't walk into that guy. This is going to be my deal. I'm going to get this. This is 20 units. This is 100 units, whatever it is. Walk it and be like, that roof looks like crap. This sidewalk is awful. The steps need to be fixed. And then it's okay that those are happening, but then come up with a solution for that. That would be the advice that I give from a risk management standpoint.
All right. So basically, be the devil advocate and look at
Yeah.
everything as with a critical eye in order for you to get and come up with the solution to fix it. And when you bring that solution to someone like Clint, he can definitely go after the best deal for you for your property. I like that. Solution centered. And that's a good way. I mean, in life, if you can solve problems, you definitely will help a lot of people. So you're basically going to help yourself by doing that. So we did have, if your name is not in the chat, go ahead. Somebody just joined right now. If your name is not in the chat, your information, go ahead and put your information in the chat right now. So somebody, and then you can save the chat. I just copy and paste everything that was in there. You can save the chat. And if you are not going, if you're looking for a conference to go, I would say Ultimate Partnering 2025 will be in Dallas, Fort Worth, which we just talking about. It's one of the biggest market. And then another thing, guys, when you're going into those market, to those conferences, make sure you're already in contact with some brokers in that area. That way you make something out of your conference. Not only you go to the conference, where you get to see some property, you meet some locals and get to understand that market. So what I was saying is Ultimate Partner in 2025, Clint will be there and I will be there. So it's in September 26th to the 28th. I will be there. If you want to go, if you want to meet a lot of people, the giant in this industry, it's a conference to go. And what I like about that conference, you get to meet a lot of people, but not only that, it's one of the cheapest conference out there. So I posted there for you the link. If you guys go ahead and copy the link and go to the if you do not have a ticket yet, that's the best time to grab one. They're gonna be going out fast. And if you use my link, you get $100 off. And also you can bring a free guest. You get a free pass for someone else. It could be your child, it could be your family member, it could be, I don't know, your partner, whoever you would like to hear those things about real estate. And one, more importantly, one of the things I always tell people, if you are doing this thing and you do not have a deal yet, keep on going to those conferences. This is how I met my partner. I met my partner at Ultimate Partnering conference. So that's how you meet people. That's how you're gonna know people. That's why you're gonna see what people doing. So those are huge networking events. Spending um $750, $800 to go to something like that is nothing as opposed to the other conferences. The other conferences, I'm not gonna lie, the smallest amount is 1,500. That's the only conference you go that does not touch 1,000. But every other conference you go, they like way up in the roof. Somebody was telling me yesterday he paid $5,000 to go to a conference. So, but if you get in the VIP, those things not adding up. I'm just letting you guys know. But not going to a conference is not the way, because you need to invest in yourself. The best way to make it in this industry, especially real estate right now, is learn and learn and learn. The knowledge will carry you. Your grit will carry you. People will see what you're doing, but not going to those conferences does not help at all, especially nowadays in those markets. And the best way you can do it is go meet some people and see what's going on into the market. And it's 3 o'clock. I'm going to thank everyone for being here. Make sure you save the chat. The way to save the chat, next to the multifamily on Zoom, the title, there's 3 dots. You click on that, and then you can save the chat for yourself. That's the way to save the chat. And then, again, I hope to see you guys next week for another multifamily on Zoom. And I truly appreciate you guys for coming here every week to see what we have on this platform and learn more and carry that knowledge with us and able to get something happen in this market. This, things are happening. A lot of people are buying though. People are buying. So there are things, there are deals that are being done. At the end of the day, you need to look at what you're doing. More importantly, I want to say thank you to Clint for coming here this afternoon and basically bring some good information for us. And the good news is right now he's saying there's a lot of movement, a lot of activities, and that's what we want to hear. We want to hear good news. And of course, the rates are going down when it comes to insurance. And thank you so much, Clint, for coming here. We truly appreciate you here. And
Thanks.
everybody else.
See ya.
Bye, everyone. Have a great afternoon. I'll see you guys next week.